Welcome to Stock Wars. For the first time ever, we have a battle between three dividend stock combatants that will determine who seizes galactic supremacy and is the most attractive consumer staples company going forward. The first Stock Wars combatant is Procter Gamble. The company is an American multinational consumer goods corporation headquartered in Cincinnati, Ohio, and it was founded in 1837 by William Proctor and James Gamble. The Procter & Gamble Company provides branded consumer packaged goods to consumers in North America and Latin America, Europe, Asia Pacific, Greater China, India, the Middle East, and Africa. The company sells its products through mass merchandisers, e-commerce, grocery stores, membership club stores, drug stores, department stores, distributors, wholesalers, baby stores, specialty beauty stores, high-frequency stores, pharmacies, electronic stores, and professional channels. It operates in 5 segments: beauty, grooming, healthcare, fabric and home care, and baby, feminine, and family care. The beauty segment offers conditioners, shampoos, styling aids, and treatments, and antiperspirants and deodorants, personal cleansing, and skincare products under the Head & Shoulders, Herbal Essence, Pantene, Rejoice, Olay, Old Spice, Safeguard, SK2, and Secret brands. The grooming segment provides female and male blades and razors, pre- and post-shave products, and other shave care products, and appliances that include electric shavers, epilators under the Braun, Gillette, and Venus brands. The healthcare segment offers toothbrushes, toothpaste, and other oral care products. They also sell gastrointestinal, rapid diagnostics, respiratory, vitamin and mineral supplements, pain relief, and other personal healthcare products under the Crest, Oral-B, Metamucil, Neurobion, Pepto-Bismol, and Vicks brands. The fabric and home care segment provides fabric enhancers, laundry additives, and laundry detergent. They also sell air care, dish care, and surface care products under the Ariel, Downy, Gain, Tide, Cascade, Dawn, Fairy, Febreze, Mr. Clean, and Swiffer brands. The baby, feminine, and family care segment includes baby wipes, taped diapers, and pants. They also sell adult incontinence and feminine care products and paper towels, tissues, and toilet papers under the brand names like Love, Pampers Always, Always Discreet, Tampax, Bounty, Charmin, and of course Puff brands. The second combatant is Colgate-Palmolive. The company was founded in 1806 and is headquartered in New York, New York. Colgate-Palmolive Company, together with its subsidiaries, manufactures and sells consumer products worldwide. The company operates through 2 segments: oral, personal, and home care, and of course pet nutrition. Oral, personal, and healthcare segments products include toothbrushes, toothpaste, mouthwash, bar and liquid hand soaps, shower gels, shampoos, conditioners, deodorants and antiperspirants, skin health products, dishwashing detergents, fabric conditioners, home cleaners, and similar items. This segment markets and sells its products to various retailers, wholesalers, and distributors. The pet nutrition segment offers pet nutrition products for everyday nutritional needs and a range of therapeutic products to manage disease conditions in cats and dogs. This segment markets and sells its products through pet supply retailers, veterinarians, and e-commerce retailers. Its principal global and regional trademarks include the likes of Colgate, Palmolive, Elmex, Hello, Meridol, Sorso, Tom's of Maine, Elta MD, Filorga, Irish Spring, Speed Stick, Lady Speed Stick, PCA Skin, Protex, Sanex, Soft Soap, Speed Stick, Ajax, Axion, Fabuloso, Murphy, Soupline, Suvitel, and as well as Hill Science Diet, and Hill's prescription diet. The third and last combatant is Kimberly-Clark. The company was founded in 1872 and is headquartered in Dallas, Texas. Kimberly-Clark, together with its subsidiaries, manufactures and markets personal care and consumer tissue products worldwide. It operates through three segments: personal care, consumer tissue, and KC Professional. The personal care segment offers disposable diapers, training and youth pants, swim pants, baby wipes, feminine and incontinence care products, and other related products under the Huggies, Pull-Ups, Little Swimmers, Good Nights, Dry Nights, Sweetie, Kotex, You by Kotex, Intimus, Depends, Plenitude, Softex, Poise, and other brand names. The consumer tissue segment provides facial and bathroom tissues, paper towels, napkins, and related products under the Kleenex, Scott, Cottonelle, Viva, Andrex, Scottex, Neve, and other brand names. The KC Professional segment offers wipers, tissues, towels, apparel, soaps, and sanitizers under the Kleenex, Scott, Whiteball, Kimtech, and KleanGuard brands. The company sells household use products directly to supermarkets, mass merchandisers, drugstores, warehouse clubs, variety and department stores, and other retail outlets, as well as through other distributors and e-commerce. And away from home, use products directly to manufacturing, lodging, office building, food service, and public facilities, as well as through distributors and e-commerce. Let the battle begin. Procter & Gamble is currently trading at $134.85 and is up over 18% year to date. Over the last 5 years, Procter & Gamble is up over 65%. Colgate-Palmolive, which is trading at $83.78, is up this year, seeing an increase of over 18%. With that said, Colgate-Palmolive is up over just 18% for the last 5 years. Our third competitor, Kimberly-Clark, is currently trading at $130.63 and is down just over 4% this year. Over the last 5 years, Kimberly-Clark is up just under 3%. Now let's take a look at which combatant may perform better going forward based on its current valuation. The first item to compare is market cap. Market capitalization, commonly called market cap, is the market value of a publicly traded company's outstanding shares. Market capitalization is equal to the share price multiplied by the number of shares outstanding. Market cap is probably the least important metric in stock wars, but it is an indicator of public opinion of a company's net worth and is a determining factor in some forms of stock valuation. From a market cap perspective, there is no comparison here. Procter & Gamble is the largest company with $330.4 billion compared to $70.8 billion for Colgate-Palmolive, and rounding out the three is Kimberly-Clark at $44.8 billion. All three are dividend stock favorites, but Procter & Gamble takes the first metric comparison in this stock wars battle with over $250 billion more in market cap and comparing the trio. The second stock wars metric comparison is revenue. Revenue is the income generated from normal business operations. It is the top line or gross income figure from which costs are subtracted to determine net income. Who generates more revenue in this epic stock war showdown? In 2020, Procter & Gamble had $70.95 billion in revenue, while Colgate-Palmolive came in at $16.47 billion, while Kimberly-Clark rounded out the three with $19.14 billion in revenue. Procter & Gamble wins a second consecutive metric in this battle against Colgate-Palmolive and Kimberly-Clark. The third metric comparison in stock wars is further down on the income statement. Net income or profit. Profit describes the financial benefit realized when revenue generated from a business activity exceeds the expenses, costs, and taxes involved in sustaining the activity in question. For the third time in this stock wars battle, Procter Gamble takes the win with $12.76 billion in profit, while Colgate-Palmolive came in at $2.69 billion, and Kimberly-Clark rounded out things with $2.35 billion. Knowing the profit for each combatant transitions into the next metric in this stock wars comparison: profit margin. Profit margin is one of the commonly used profitability ratios to gauge the degree to which a company or business activity makes money. It represents what percentage of sales have turned into profits. Procter & Gamble comes in with a profit margin of 17.98, while Colgate-Palmolive is at 16.33 and Kimberly-Clark at 12.27. For this metric, Procter & Gamble wins again. All three corporations have decent profit margins. As the stock wars rage and we are seeing a clean sweep between these three competitors, the fifth metric is in sight: 3-year revenue growth. Revenue growth illustrates sales increases and decreases over time. It is used to measure how fast a company is expanding or contracting. Procter & Gamble comes in with a 3-year revenue growth of 4.4%, while Colgate-Palmolive sees 3.3% and Kimberly-Clark is at a lower 2.7%. Procter & Gamble wins a 5th consecutive metric. As the three consumer staples titans battle for dominance, P/E ratio emerges as the 6th metric in stock wars. The price-to-earnings ratio is the ratio for valuing a company that measures its current share price relative to its per-share earnings. The price-to-earnings ratio is also known as the price multiple or the earnings multiple. When examining the forward P/E, Procter & Gamble comes in with a metric of 22.45, while Colgate-Palmolive boasts a forward P/E at 25.4, and Kimberly-Clark is at 17.52. Kimberly-Clark comes out on top for the first time in this stock wars matchup. As the battle rages between these consumer staples companies, dividend yield is the next metric's comparison in stock wars. The dividend yield, expressed as a percentage, is a financial ratio that shows how much a company pays out in dividends each year relative to its stock price. Procter & Gamble comes in with a dividend yield of 2.58%. Colgate-Palmolive is at a lower 2.15 yield. And Kimberly-Clark comes in with a much higher 3.43%. For the second time, Kimberly-Clark wins a stock wars metric. 2 of the 3 dividend yields are pretty modest. Continuing on, the next metric is years of consecutive dividend increases. Companies with a track record of dividend increases tend to be more stable and motivated to maintain that track record. When analyzing the 3 combatants, Procter & Gamble boasts 64 years of dividend growth, while Colgate-Palmolive comes in at 20 years and Kimberly-Clark at 48 years. In this metrics battle, Procter & Gamble comes out on top again, now on the 5-year dividend growth, which is the next metric in this stock wars battle between these consumer staples leaders. The dividend growth rate is the annualized percentage rate of growth that a particular company's stock dividend undergoes over a period of time. Many mature companies seek to increase the dividends paid to their investors on a regular basis. According to Fidelity, Procter & Gamble has a 5-year dividend growth rate of 5.37% compared to Colgate-Palmolive at 2.9%, and Kimberly-Clark is at 4.3%. Procter & Gamble claims yet another metric in this stock wars matchup. This begs the question for the next metric: how safe are the dividends? The Dividend Safety score system takes into account more than a dozen fundamental metrics that influence a company's ability to continue paying dividends. According to Simply Safe Dividends, Procter & Gamble has a score of 99, which is considered very safe. On the other side of this trio, Colgate-Palmolive has a score of 90, which is also considered very safe, and Kimberly-Clark rounds out the 3 with 88, which is also considered very safe. Procter & Gamble is the winner of this stock wars metric. The 11th metric in the stock wars contest also reflects on dividend safety, the payout ratio. The payout ratio is a financial metric showing the proportion of earnings a company pays shareholders in the form of dividends. It is expressed as a percentage of a company's total earnings. Currently, Procter & Gamble's payout ratio is 63.96%, while Colgate-Palmolive is at 58.06%, and Kimberly-Clark rounds out the three at 68.37%. All three payout ratios are respectable, but Colgate-Palmolive is the winner of the Stock Wars metric and takes their first victory. Moving on quickly to the 12th metric, the three giants will compare current ratio. The current ratio is a liquidity ratio that measures a company's ability to pay short-term obligations or those due within 1 year. It tells investors and analysts how a company can maximize their current assets on the balance sheet to satisfy their current debts and other payables. Procter & Gamble comes in with a current ratio of 0.71. Colgate-Palmolive, on the other hand, sees a current ratio of 1.01, and Kimberly-Clark is at 0.77. The higher the current ratio, the better. Therefore, Colgate-Palmolive takes this Stock Wars metric with a slightly higher current ratio. The last metric is the debt-to-equity ratio in the Stock Wars contest. The debt-to-equity ratio is calculated by dividing a company's total liabilities by its shareholder equity. These numbers are available on the balance sheet of the company's financial statements. Procter & Gamble sees a debt-to-equity ratio of 0.64. Colgate-Palmolive comes in at 22.83, and Kimberly-Clark is at 17.03. While all three are well over 0.5, which means their assets are financed by debt, Procter & Gamble gets the better of this metric and wins another one. In this Stock Wars battle, Procter & Gamble won 9 metrics compared to Colgate-Palmolive and Kimberly-Clark that each won 2. Procter & Gamble is the winner of this epic Stock Wars battle of these three consumer staples dividend favorites. Procter & Gamble wins this overall Stock Wars contest from a metric standpoint in blowout fashion between the battle of these three. Most would argue that Procter & Gamble and Colgate-Palmolive companies are modestly overvalued at this moment. Currently, Kimberly-Clark is considered the best value of the three. If you missed the first 10 episodes of Stock Wars matchups, please check them out and let me know what you think. I'll leave links in the description. Stay tuned for future Stock Wars episodes, and please like, subscribe, and turn on the bell notification so I know you don't miss any future episodes. Comment below if there's a particular battle you'd like to see. Until next time. Remember, I am not a financial advisor. The opinions expressed in this video are solely for educational and entertainment purposes. Any stock purchases I show on video should not be considered an investment recommendation. Investing involves risk, and you should do your own research. For investment advice, please seek the counsel of a financial investment advisor.